Here are the key takeaways from the Federal Open Market Committee's interest rate decision, and Chair Jerome Powell's news conference Wednesday. The Fed raised rates by a quarter percentage, point to a range of 5%, 5 or 25%, instead of a pivot to making decisions on a meeting-by-meeting basis, opening the door to a pause after this. Both were broadly expected by markets. The decision was unanimous. Chicago Fed President Austin Goolsbee, who has sounded a more dovish note following recent banking sector stress, did not dissent. In his post-meeting press conference, Powell said support for the 25 basis point hike is very strong. Then the Fed said inflation, labor market, and credit conditions data will factor into future policy, with Powell noting that the job market is still very tight and uncertainty about how much reduced lending for banks will contribute to a cooling in the economy is still uncertain. The Fed will also continue its balance sheet runoff. And Powell answered several questions about the Fed's SVB report, saying the central bank will work to strengthen both supervision and regulation for mid-sized banks. He also said that it's essential for the debt ceiling to be raised, and that the U.S. government default could be quite adverse. The market reaction in both stocks and Treasury yields was fairly muted compared to prior meetings. At the S&P 500, declined 0.6% as of 3:30:36 in New York. The two-year Treasury yield was down 6 basis points.